Good morning, everyone. สวัสดีค่ะ
Welcome to our analyst meeting for the 2022 full year results for ITEL Corporation. We're joined today by our ITC executives. The first to present will be Mr. Pichichai Wongbiya, CEO of ITEL. Our second executive is Chaiwat Charanrujitanon, CFO. And our third on stage is Mr. Ponchai Tatiyachai Tawisok, acting CEO. And I'm in charge of investor relations. Without further ado, we're going to begin our half-hour presentation, and then we'll have a Q&A session. Hello, everyone. Let me present ITEL for all of you so that you can get to know us better. At ITEL, we are the leading manufacturer of pet food, and we focus on wet-based pet food and also premium products in response to the humanization trend in the market. Our customers are retailers and leading brands from around the world, and our business is driven by R&D and innovation. And we'll look at this in further detail later. Let's have a look at the key investment highlights. We are the number 2 company in Asia, and we are in the top 10 for the entire world. The pet care industry has a global market size of 7% annual growth rate, and we have a diversified product line. For the last year, we had more than 5,600 SKUs, and we focus on R&D and innovation, as mentioned earlier, and our products are high-margin ones. Our customers are leading customers from around the world, and they've been with us for a long time. We have more than 400 customers from around the world, 45 countries, over 45 countries to be exact. And our management team is strong and experienced, and we are focused on ESG. Last year, we had, as I mentioned, more than 5,600 SKUs. Our sales volume last year was more than 137,000 tons, and we launched more than 1,200 new products in the market last year. Our revenue is at 21.4 billion Thai baht. We were looking at a 25% growth, and our gross profit margin was at 25%, or 5.3 billion Thai baht, and our net profit margin was at 20.5%, or 4.4 billion Thai baht. This is a summary of our key numbers for you. If we take a look at our growth, our revenue grew by 47%, gross profit went up almost 60%, our EBIT went up by 63%, and our net profit grew by almost 62%. The majority of the market has seen growth in Asia and in Europe. Our own products have been selling at higher prices as well. The average selling price went up, and we have achieved better cost management in our facilities. We also looked at a depreciating Thai baht, and our logistics or supply chain in the latter half of the year was more normalized, and this supported ITEL's growth last year. Looking at the industry numbers, last year the numbers were about $4 to $5 trillion. That's the size we're looking at for the global market. And it grew about 7% from 2017 to 2021, and we're forecasting growth of about 7.3%. ITC, for the past few years, we grew at 25%, and our forecast for the years ahead is 15%. We're looking at growing demand for pet care, and this is a mega trend. There are more single people, there are people who are married but don't have children, and these people want to have more family members, and their pets become their family members. And the cost per pet is also growing around the world, and innovation in the market is leading to more products, more packaging, and this is happening all the time. And these are drivers for growth in the industry. The pet food industry is divided into cat and dog food. Dog food may seem larger than cat food, but if you look at the growth rates, you'll see that cat food has grown faster than dog food. And ITL, 70 to 80% of our business is in cat food. In terms of dry food, the portion is greater than wet food, and the growth is about the same, about 7 or so percent. ITL's customers, our top 3 customers, have been with us for more than 22 years on average. And these top 3 customers, account for almost 50% of our sales. Not only have they been with us for a long time and account for a majority of our sales, they have grown by 30% year on year. Our new customers that we brought on board last year, we have 22 compared to 13 the year before. And the revenue from our new customers grew by 8 times. And this shows that our new customers from last year are those who are high quality. They have purchase ability, high purchasing power. And ITL, we launched over 1,200 new products. This is plus or minus 15% of our profitability. And we have a growth from our new products of more than 20%. And more than half of these products are premium products, 49% of them are, and the other 50% or so is mid-priced or mass products for the mass market. In terms of ESG, ITL has adopted the Sea Change program from Thai Union, 100% adoption. Mr. Thiraphong mentioned this morning, this is a program that has been listed in the Dow Jones Sustainability Index for 9 years running, and last year was the 3rd year for this program and for Thai Union Group to be ranked number 1 for food in the food industry. And our other activities for ITL and Thai Union as well. In the 1st of January, this began last year, we were one of the first countries, one of the pioneers in our industry to use EPP or employer pays principle for our foreign laborers who have had to leave their homes and work with us. So we are footing all of their expenses. And this is a commitment that we have made to them to take care of these laborers. Mr. Thiraphong actually mentioned some details on this slide, so I don't want to repeat what he said, but ITL was listed in the beginning of December of last year, and we broke the record for being the largest IPO in the food and beverage sector in Thailand. And last year, our IPO, we had the highest market capitalization for all IPOs as of last year. As of the 16th of last week, our market cap was at about 94 billion Thai baht. and Thai Union accounts for 78%. This is about our dividends. Last year, we paid dividends at 4.08 billion Thai baht. Our dividend payout is for 3 quarters for existing shareholders, and in the 4th quarter, we took proceeds from our net profit, about 90% or so, to share that with our shareholders. And so our dividend payout is about 0.2 or so baht per share. Remember, this is only from 1 quarter, from the performance from 1 quarter. And we will be paying the dividend out on the 18th of April. I'd like to invite Khun Chaiwat, our CFO, to speak now. Hello, everyone. You're also sitting so straight. It's as if I'm a lecturer in front of a classroom. I'd like to present the key highlights for our financials, our financial performance for last year. This last year was a very successful year for ITC, and this is based on our new high base for ITC. The 3 of us were not new to the business. We might be new on stage for you, but we have more than 20 years of experience, and our operating results, we'll present about them from 2019 up to 2022 for you. We have grown all along, and we've reached a new high base in 2015. And in 2022, we have another new high base. Our key highlights today: ITL last year grew exceptionally at 47% year-on-year. And our gross profit margin, our EBIT, and our net profit margin also all achieved high numbers. Our gross profit margin is at about 25%, and this is in line with our goals that we presented to many analysts. Many of you attended, I believe, our presentation during the IPO launch, and we have delivered what we presented, that 25%. EBIT has grown 63% year-on-year, and I'll talk about this in more detail in the next slides. Our net profit grew at an all-time high to 4.4 billion Thai baht. Last year, we had a one-off item, 2 items in fact, and in the 4th quarter, we had a one-off item in the quarter 4. That was the recruitment fees, and our CEO mentioned them earlier. We applied the policy of employer pays principle. We recruited foreign laborers. Many of them have joined us, and we had this expense at about 66 million Thai baht. And we had to pay this during the IPO. We had IPO expenses as well, another 68 million in IPO expenses. If we add these one-time expenses back, our net profit is in fact 4.5 billion Thai baht, if we adjust it for these one-off items. So it's about 21%. The gross profit margin is. We have reached our targets as mentioned. Another key highlight that I'd like to mention is that we are cash positive because we have raised funds and we have repaid our loans to all of the financial institutions. So our interest-bearing debt right now is 0. Our interest-bearing debt per equity to equity is also 0. So our liquidity is very strong. So we have always been strong, but today we are even stronger. And we're going to expand, and our CEO will speak about our expansion later. I'd like to take a look at some details for you. Some of the numbers may be different from what Thai Union presented only because when we presented in our IPO numbers, we were using the pro forma financial statements. So we need to look at those as well. In 2022, our pro forma financial statement was very close to our MOPSTAT, our statutory financial statement. The numbers include if we look only at pet food, we have certain performance numbers we would like to share with you. Mr. Pichichai did share some with you just now. In this page, what we want to highlight here is that in the past 4 years, 2019 to 2022, we have grown. We have a CAGR of 25%, compound annual growth rate of 25%. The market itself has grown by 7%, but we have grown by 25%. And that means that we have grown 3 times more than the market has. The market has a CAGR of about 8.7%, but ours is 25%. We have plans, as mentioned to many of you before. We are targeting at fast-growing segments, which is wet cat food and wet dog food and treats. And you'll see these in the next pages. Our expansion is in every zone, but the most important expansion is to the Americas. We grew by 77%. And in Europe, it also grew. The number is 90%. And AOA has grown by 23%. We have seen growth in every market and in every segment, whether it's the cat food, dog food, or treats. Last year, you can see the important category that grew was the treats. It grew by 49%. Dog food before that, many of you may have asked that dog food, why don't we emphasize dog foods? Why are we only emphasizing cat food? Perhaps ITC dog food wasn't growing very much, but last year we're looking now for dog food at a growth of 55%, and the major reason is parents of dogs, they prefer small-sized dogs, so wet food dog and treats for dogs, for small-sized dogs, is growing. And we're seeing a growth in the population of small dogs as well. And that's why our dog food results are so good. And this is a summary of our P&L. The net profit, as mentioned earlier, is about 20%. At 4.4 billion Thai baht. And this is a growth of 62%. And we want to show this to you so that you don't have to worry anymore. Pet food is an attractive business. When we quote prices to our customers, we quote them in terms, 6 months, 12 months. And from the start, when we talk to our customers, we know what exchange rate we're going to use. We hedge our businesses from the day we talk to our customers. We have natural hedging of 30 to 40%, and the remaining, which is the cost of what we buy in Thailand and also our margin, we protect these with 100% hedging with fixed forward contracts. So our bottom line, from net sales all the way to gross profit margin, we have hedged all of this. Many of you may worry About other income in the fourth quarter, why is it down by so much? Remember, there is a period from when we recognize these items, but I want you to look at the overall year. For our pet food business, we have fixed forward contracts. So the timing is longer than for our human food. So for the entire year for ITAL, we have gains. We have realized gains from the exchanges at about 175 million Thai baht. And this is why, for us, we have a small impact from the exchange rate. In terms of sensitivity for us, the exchange rate last year was at 0.8%. So rest assured, our top line, we have hedged it, it's protected, 100% protected, but there are some periods where we don't have a perfect hedge, that's all. And on this page, the highlight is, aside from our top line growth, which has been exceptional, another important factor that we'd like to have you take a look at is our cost advantage. We are part of Thai Union Group, and we have lower labor costs compared to other countries. And we join together to buy tuna. That provides competitive pricing and a competitive advantage in buying tuna compared to our competitors. And our internal management, we have cost management programs. We have many initiatives, so many initiatives. If you were to see the details, you would be amazed by how many initiatives we have. But we're focused on, one, managing to use high efficiency labor and skilled labor. Second, we focus on what we can improve and with the aid of automation so that we have a lower cost per unit looking long term. And in terms of energy, that's the third thing. Many of you may say, energy is going to increase. Is it going to impact us? No, you need to understand that we are using renewable energy, and this is helping us to actually incur savings, and the cost per unit for SG&A per unit is lowering, and we can maintain this at 5.5 to 6%. Last year was at about 5 to 8% for SG&A. Another benefit compared to our competitors, especially our foreign competitors and competitors here in Thailand, is that we have management from BOI. We have benefits from BOI, current benefits. We have up until 2027 for the tax benefits, and we received approval for a new BOI certificate, and this will take effect immediately from our former certificate, starting in 2025 and running up to 2031. And being listed on the Stock Exchange of Thailand, we have also submitted a new BOI application saying that ITAL has just been listed on the market, and we're asking for 1 times more of the benefit. So the investment that we've made in the past and for the new certificate as well, we're looking at 2 times of the benefit, 2 times the benefit. Especially in terms of our new factory, we're looking at 2 billion. Our corporate income tax exemption is 4 billion. So compared to our competitors, we have a greater number of benefits. We're looking at a 1% advantage, and last year it was 1.1% advantage. And this is about our financial position. Our cash cycle days have improved. From last year, We faced ships, logistics issues, and higher costs. But towards the end of the year, we were able to manage, especially in terms of stocks. We had better management. We were able to have a better control of inventory turnover to 93 days. And this year, we believe that we will be able to manage these even better. Our cash cycle days this year, last year was 110. This year, we believe it will be better. Our return on assets for last year was 22%. This year, we expect it to be better. Return on equity was 28. Interest-bearing debt to equity was 0. As I mentioned earlier, that we had already repaid all of our financial institution loans. If you look at our DE ratio, you will see that we are at about 0.1% because we have 3,000 in debt and equity of 25,000. From this day forward, we believe that our liquidity up to 2025 will be one where we invest our funds into high potential businesses that lead to higher margins. And this is our summary of our financing. We raised funds over 18.7 billion Thai baht, and this is excluding the expenses. We repaid loans of 7,400, and the total utilized was 7,965. We will continue to use our funds efficiently as reported to the SEC. And our investments we expect yields from our investments. And this is the growth for the future and our strategies. Our strategies moving forward, our goals for 2025, we are looking at sales of $920 million. This is according to the current situation. We're looking at $920 million in 2025. We plan to grow 4 strategies. And the analysts here, if you listen to our IPO presentation, this is no different. Let's take a look at this slide. Now, let's look at our progress. Many of you probably want to know about our progress because you probably attended our IPO presentation. We're going to stay with our existing and leading customers because these are our main customers. Our top 3 customers, our accounts are at about 47% or up to 48%. And Pichichai told us, why do we have to focus only on our top 3 customers? That's because they are world brands that continue to grow. And these top 3 global brands, some of them are public, some of them are growing by 7 to 8%. But with us, we cannot focus on their announced numbers. We supply to so many of their brands, and the numbers that they announce is their accumulated or their conglomerate numbers. So the numbers that we're looking at are not the numbers that they announce. The numbers we're looking at are the reality for us. The numbers are bigger. Last year, we had sales in terms of our treats that were growing at 15%. Before our IPO, our treat business had good profitability, and for every brand, we focused on treats, the treats. It's a very fluid business. And because it doesn't require much in terms of raw materials, that means the profit margin is higher. So from 50%, we're looking at 22% for treats. 22% of our entire sales. That's our target for 2025. On the right-hand side, we want to grow to find new volume and new customers, whether it's in America or in Europe, in terms of private labels. And private labels, we have newer customers that we are in pursuit of, that we are planning to approach. And our private labels, we're going to see an increase in the volume as we expand our private label businesses. Private labels, as many of you know, we're looking at premium products, and private labels want to have premium products. They want to make a lot of money. They want to have good margin. They want to be like global brands too, or national brands as well. All stores want to have their own labels because inflation continues to grow, and the pet industry is one that continues to grow. And pet labels in the pet industry is also growing. Last year, the private labels were at 15% of our target, and for 2025, we're looking at 18%. Why aren't we targeting 20 or so percent? Well, we still have to be cautionary. We have to be careful. It's because we're not looking at 20%. We're looking at premium products. Mass products, if the profit is not good, that's something that we don't want to target on. They might have products A, B, C, D on the shelf, and they may say to ITEL, let's do A, B, and C because they're doing it from another factory. Because if we do that, that means that there will be lower prices, and that's not what we want to compete in. We want to compete in the premium product category. This is our new market. Let's have a look at this. The new markets that we're focusing on are not just in China or in Europe. There are many markets, but we're going to focus mainly on China and the UK. In China, this month, in fact, we are establishing a new office, ITEL Pet Food Shanghai. That's the name of the company that we are establishing in Shanghai. And we expect to finalize that within this month. This company is going to be a three-pronged one. We're going to focus on Chinese customers. All brands know that the Chinese market is the fastest growing one in the whole world. They're looking at double-digit 18, 19, 20% CAGR up to 2028 is almost 20%. That's why we need to set up a company of our own in Shanghai so that we can be an importer for these brands. And then we can help these other brands expand and set up their market in China as well. And we can link them to custom clearings, for instance, and this will be value-added services that we provide. The domestic brands in China, there are no clear winners in China. The market share, the domestic brands continue to grow. And this week, we are going to announce a new strategy, so just wait for the news on that. We're going to be working I'm really excited to share this with you. We're going to be working with our customers in China to be on the online and offline platforms in China. We mentioned this before our IPO roadshow, that we have one platform, a major platform, but now it's two major platforms. So perhaps tomorrow or within this week, there will be news that we will announce about this. So just stay tuned for that. This is our third strategy. We're focusing on leading e-commerce platforms. And in the EU and in the UK, we're going to have ITEL Europe, and we're going to set this up in the Netherlands. But we're not going to limit ourselves to just the Netherlands. We're going to look at the mid and the west of Europe as well. These are private labels we're focusing on. In the UK, we have a team in the UK already. And we're beginning to talk with our customers, especially the big four supermarkets in the UK. And we're very confident that one of the big four supermarkets will choose us to provide them products under their own label. And we're confident that smaller businesses will join us as well. In Germany, it's the biggest market for pet food in Europe. And what we're trying to do in Germany is we're looking at the drinks products, which has more water, less meat. And everyone knows that the beverage market is where the profit is. So that's what we're looking to launch or to expand in Germany. We have many customers who are waiting to use our services, but right now we're being exclusive. We are sending 20 shipping containers to them a month. And this is going to be another online platform in Europe. And this is the drink product series we want to mention to you. This is an update on our innovation. Last year, our innovation was on the platform based on 3 megatrends: alternative protein, functionality, and humanization. This year, it's the same, but what we've added to this is what we're bold enough to announce is that we're going to enter the supplement segment. And there are 2 sides to this. One are supplements, direct supplements, like powdered or capsule form supplements. The second part is supplements through food. We talked about food and medicine before, and this is what it is. Dogs and cats, the pets, when you give dogs or cats medicine, when it comes in a pill form, a capsule form, you have to force them, right? Their moms and dads have to force their mouths open and stuff that down their throat. We don't want the dogs and the cats to have to suffer through that. We want them to enjoy the medicine that they're eating. So this is preventive measures for pet owners as well. And we're looking at taste. We're testing this right now, and we have new products. On the right-hand side, you can see on the screen, we have our brands as a showcase. We can't show our customers' brands, of course, so we're showing our own brand for you. This is to stimulate the market. This is to act as a showcase for our customers, whether it's locally or abroad. We don't want the market to be confused. Changer is here. We do functional food. It's not shown on the screen, of course, because that's not our policy. And we're going to continue to launch these new products to stimulate the market, not just locally, but also abroad. And on the next page, since last year, we mentioned that our formulas and our innovations, they could be great, but if the dogs and the cats don't enjoy them, then we can't sell. The cats and the dogs need to enjoy our formula. So this is our cattery. This is the real thing in this picture. Of course, the trees are not full grown yet, but it's getting there. It's all set up now, and we have about 24 cats on our panel right now. We plan to have a total of 48 cats. We have recruited over 100 cats, and we tested them, and they had to take tests, and if they didn't pass the test, then they could not join our panel. And so at a future date, if we have the opportunity, we would like to invite all of you to visit our cattery and we're going to officially launch it in March of this year. And we plan to accredit this for global accreditation, ALAC. And this, we have the Thai government has ALAC. ALAC is an accreditation is for laboratory animals, but this is not. These are not lab animals. These animals are on a panel to try out all of our formulations, because our policy is I Heart in Home. And so we will invite you at a later date to visit our cattery. And this is our last strategy. We continue in terms of productivity improvement. We co-create. We're not just a manufacturer. And whether it's production, quality control, or energy usage, all of these are important because our customers, they see that we can do a good job. Our efficiency has to continue to be strong. We have hundreds of initiatives, and we have to continue to be able to deliver to our customers. We have to have cost savings from day one. Cost savings have to be implemented and have to be passed on to our customers. And in terms of energy, our goals are to, by 2024, have 30% of the energy generated from the solar cell panels that you see in that picture. And we want to have 100% automation by the year 2024. And lastly, our suppliers. We continue to talk to our suppliers, especially in terms of cost savings, new raw materials, in terms of packaging, making sure that they're recyclable, for instance. And this is what we're doing with our suppliers. Now let's have a look at our CapEx projects. We were at about 2.2 billion Thai baht. That was our target. And we've had some projects that were delayed, and they will be completed in this year. CapEx that has been set for this year is at about 2.1 billion Thai baht, and this will be for up to 2025. For up to 2025, we're looking at 4.2 billion Thai baht. We're going to expand our factory. We're going to invest in a warehouse that is going to be automated, whether it's in Songkhla or Samut Sakhon. And so you're saying, oh, we only have good news for you. No, of course, we do have some headwinds. What are the headwinds for us? Well, raw materials, there is some volatility that we're facing. There are higher prices, lower in prices, freight costs, for instance. It might seem that these are, the crisis is over, but we don't know about the energy crisis, how that's going to affect the freight costs. There's our FX exposure. But this is, again, something that we just cannot accurately forecast. There's headline inflation. Inflation is something that is happening all around the world. These are risk factors, perhaps, if you want, or challenges that we have to face. ITL will continue on. We will co-create with by working closely with our customers. As Chaiwat mentioned, we do hedging with our fixed forward contracts. This helps to reduce the impact of the FX exposure. We're going to pass on our costs from the higher costs to our customers, because we are not just buyers and sellers with our customers. We're more like partners. And looking at our exports, it's mostly FOB, which means that we don't have to worry about the freight on board. For the themes for 2023, we're still focusing on humanization and premium trends and health and wellness for our cats and dogs. And we're going to continue to drive our businesses forward based on sustainability and innovation. As mentioned earlier in our presentation, ITL is the #2 pet food company in Asia and one of the top 10 companies in the world. We will continue to focus on premium and healthy wet food, pet food, and for all of our customers around the world. For this first quarter of 2023, it might be a bit weak, but we expect to achieve no less than 85%. That's our target of our target. And within the first half of this year, we believe that we will hit the targets that we have set. So the first quarter, again, might seem a little weak. And in summary, our guidance for this year is that our top line will grow 15 to 70%. Our gross profit margin, we're aiming for 25% because we believe that is something that we can attain. Our SG&A ratio, it will be 5.5 to 6.5%. CapEx we mentioned earlier. And our dividend policy is just like our parent company, TU. We will pay at least 50% of the net profit. And this is the wrap-up for ITL. Are there any pet parents out here who have questions? Hello there. I'm from KGI. I'd like to ask about two or three issues. The first is about the gross profit margin, that we're going to focus on treats and private labels with improving margins. Could you share about the margins? How are the margins here better than the mass products or the mass labels? I'd like to explain that our pricing strategy is a cost-plus model. So our products, it depends on the complexity of the product. For the treats, the formulas for the treats, if it's a complex formula, or if it requires more and more ingredients, or it's more functional, then we will follow our policy of marking up the percent of the margin. And this will vary according to the products that are high-end. Wet-based products are the same, or wet treats. Our price quotation is according to the product rather than according to the sales area or the sales method. So our percentage can hit the target according to our policy. And this is one of the charms of pet food. It's what makes it attractive. When people come in for market share, it's harder because you need to have expertise, you need to have innovation. And what about your longer term, or 3 to 5 years from now, your margin at 25%? If we talk about OEM businesses, it seems high. Is this sustainable in the longer term? This is a question that we are asked often. With a higher margin like this, of course, it's attractive to newer players in the market. And will we see higher competition? This is a reality for us, and we have to continue to push ourselves forward to leave space between us and our competitors, to leave them trailing behind us. We have stronger ability. We have a focus on innovation. Our innovations are in the pipeline. It's not that we create them today and use them next year. It's that we create them today and we use them in years ahead. We're not only looking at pet food, we're looking at human food, we're looking at children's food, we're looking at the trends. Innovation is something that will allow us to have patents in the future so that we won't have competitors for that particular innovation. But if we cannot acquire a patent, then we will make our products much harder to copy. So we're focused on maintaining our margin. And I'd like to ask one more question. Your price quotation, you said that you sell 6 to 12 months long-term contracts, but you have other costs that you have to incur, like labor costs or electricity costs that increase. How do you manage these costs so that they don't impact your margin? I'd like to break this down into two areas. The first part is the pricing, which is 6 months, 3 months, 6 months, and 12 months. And most of our customers, we provide a 6-month quotation. It's very transparent with our customers. We keep continuous line. We have an open line of communication, continuous communication. If it's our new products, we update the prices. And when we update the prices for our major customers, our large size customers, we have a mechanism to calculate the price using the raw material cost 6 months ahead to price for the next 6 months. For instance, for tuna, the price of tuna goes up and goes down. We can quote the price for the next month. We pass through this cost, and we are fair to our customers as well. If the price goes down in the next 6 months, then we promise to lower our prices as well. But what we can do transparently with our customers is the fixed cost. We can tell them for this period, we have a cost per unit at this amount, and we're very close to our customers about this. And for the larger customers, they know that there are certain periods where our costs in certain areas will go up. For instance, last year in the 10th month, October increased the labor cost. Our customers realized and knew, but we didn't say that we would increase our cost from the 10th month onward. We would increase our costs in the following month. When we talk to our customers like this, very open, and we have a partnership with them, they understand us because we are so open with them, because we treat them as partners, not like customers. And this is how we maintain our sustainable relationship with them and continue a relationship where they're happy with our practices. Thank you very much. I'm Cholada from BOA. I'd like to ask about the guidance for SG&A to sales. Last year, it was down at 5.8%, and if we exclude the IPO-related expenses, 5.5%, right? The sales for 2023 will grow. So why are you looking at the SG&A range of 5.5 to 6.5%? What factors? Are there other factors? Is there more spending? For spending, the range of 6.5%, we've discussed this. We're going to expand the market, whether it's in China or in Europe. In the beginning, we will have to add on more of our workforce. And the 6.5% that we set, this is conservative because in every year there are certain periods, there might be a one-time expense that we have to incur. Nonetheless, we are always discussing this. We agree that it should be an average of 5.5 to 6.5%. Thank you. You have a long-term target for treats from 15 to 22, and in Europe from 19 to 23. In 2023, do you want to see increased contribution from these, and how much? For 2023, the contribution will grow from last year by about 1%. We're not looking at a lot in 2023 because there are strong inflationary pressures, and we've discussed with our customers in terms of outsourcing and other products. We're talking about the adjustments with our customers. And our customers, they're happy, and we ourselves, we want to be conservative. We're looking at only 1% for now. But in 2025, it will be according to the numbers that we provided. And the last question I have for you is the top 3 customers. You have customers that sell fish. Does this impact your plans, or are they delaying things, or is everything going according to plan? Everything is going according to plan. Everything is moving forward. Of course, we can't exactly foretell the future. But we have to look at both sides, even if the customers, if they move some of their brands to under another company, and there are people who are in charge of discussing their brands with us. We're still talking to the same team. Nothing has changed yet. And what about decision making? Is it still the same? Yes, because the people we talk to are the same persons. And there's a question on our online platform. In terms of automation, will you be able to reduce the costs and lower the number of employees, and by what percentage in 2024 compared to 2022? In terms of automation, if we're going to lower labor, for us, we do have some labor-intensive business, especially for tuna. We require skilled laborers to rid the skin of the tuna, for instance. Can we lower the number for labor and increase the efficiency of the automation? Actually, we're looking at improving our laborers' skills at the same time so that we can maintain the same level. In terms of automation, we're going to invest in our warehouse. We're going to make it more automated. We're targeting 100% automation. If we can achieve 100% complete automation, then the labor will go down by about 400 to 500 persons who are working at the moment, and this is our labeling line as well. And automation of other parts, there might be some semi-automation for packaging, for instance, or putting our product in pouches. For filling the packaging, this will be semi-automated. By how much? We have to do our studies for these projects. We will do feasibility studies. We always do feasibility studies for every project. We determine the worth of our efforts. And every project must have a net present value, a high net present value, and a high IR. This is on average. We want an IR at about 15% on average for return. So we need to have compensation from what we invest and to cover the depreciation. I'd like to ask about the treats and the supplements. What's the competition like? Are there many competitors, or are there a few competitors in this area? Are there any barriers to entry for treats and supplements. Thank you. Our competitors, we benchmark OEMs just like us. And our OEM competitors are in the States, in America. And they are not in the supplement business yet. They're focused on mass products and dry pet food. And they're using raw materials that are byproducts, and that's competitive at where they are. For instance, they use cattle intestines, for instance, that people don't consume. They are not in the supplement business just yet. But if we look at global brands that have supplements, we don't consider them competition. We actually consider them to be potential customers. And we have global customers. We could consider them as competitors, but why? Why would we do that? We want to approach them as suppliers, and we have to convince them to accept us as suppliers. So there is no one as a competitor in terms of supplements. Barriers of entry would be the standards, would be the innovation. We're going to register since last year. We've studied and we've prepared. We have our business cases. We've done sound checks with our potential customers who are global brands. When we look at starting something, we do an in-depth, deep dive investigation of the market, and we discuss with our customers whether this is right or not. And why a trap for success is when you keep everything quiet and you don't let your potential customers know, and then when you launch the product, nobody buys it. So we work towards filling the gap here by talking with our potential customers and asking them if the products that we're developing, will these meet their needs? So we have to lift ourselves up, whether it's in terms of standards, and this is all in the preparation stage. And I'd like to ask, when you co-create formulas like for treats or supplements with your partners, with your customers, the formulas that you create, do they become your property, or do you retain the intellectual property, or does that become the customers? We are an OEM business, so we know deep down that we are making the finished product. There is no customer who wants us to produce this finished product for some other brand. So we focus on the ingredients. I'd like to raise this example. I have a notebook, and my notebook has stickers that say, has Intel inside. We remember on the computer you'll have Intel inside, right? That sticker. We want to be ITIL inside in the product. We have 500 SKUs, for instance. We want our essence to be in those products. If they take the whole recipe and they have someone else manufacture, it's not possible because we have that secret ingredient. We want our customers to trust us. They do trust us because they know that with the special and secret ingredients for their particular formula, we don't share that with other brands. We've been able to keep our customers on average 22 years with us. They trust us because we don't betray them. We're truthful. We're trustworthy. We continue to increase our premium ability. We are running out of time, so we're going to take one last question all the way in the back there. Hello, I'm from Romsai Capital. I have one question for you. For large customers, could you share the categories that you supply, the products you supply to them, how much is your contribution in their view? What's the share of the wallet for them compared to the whole category? One of the major customers we have is a pet food company that is the biggest in the world. And these companies, whether it's Nestle or Smucker, they have their own factories. And we don't know how much they produce. What they don't produce and they outsource, we are not the only supplier for their outsourced products. Even if we ask them, no matter how many times we ask them, they don't share this information because they don't want us to know how important we are to them. So if we refer to our global brands like this, it might be difficult for us to gauge ourselves as to how much we contribute to them. But there are some customers in some countries that we do know. We know what percentage we contribute. There are some. So I'd like to end the session for ITL, and if you have any further questions, you can contact our email, ITL_ the email address. And I'd like to do a bit of PR. We're going to have an open house to our factory. If anyone is interested, just wait for the news on this invitation. And it's not for people to eat. It's for the dogs and cats, okay? It's for them to eat.